Well, thanks for joining us. I'm Marlon Bowling with a look at our market action. And we were recounting what USDA had said we had for crop conditions around the country. Also wanted to touch on our winter wheat harvest activity over this past week as well. And just to kind of get you up to speed here on what the progress ratings are, in the plains, we have Texas at 90%, or excuse me, 98% compared to a 5-year average of 90%. The Oklahoma wheat harvest, done, and their average is 95%. Kansas now 80% done with their wheat harvest, and that compares to a 5-year average of 76, so good progress there. Nebraska is up to 16% harvested, and their average would be 19, so just very slightly behind. And South Dakota normally would have 4% out of the field by now on their winter wheat, and they really haven't gotten started yet this year. Just kind of wanted to point that out. I believe we have spring wheat conditions as well, and wanted to touch on those for you. Well, that is winter wheat condition. There you go, spring wheat condition. Showing Idaho in there at 69%, good to excellent this past week. And you had Washington State at 86%, you had Montana at 82%, and South Dakota 68%, North Dakota at 61%. All of them were just slightly higher in condition than last week, except for Idaho, and Idaho declined by 7 percentage points just last week. Wanted to bring in Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri, and get his thoughts on the crop ratings that came in yesterday. Didn't seem to be anything too earth-shattering. What caught your attention there, Brian?
Yeah, good morning, Marlon. Nothing real great in this number that we saw yesterday. The corn came in below expectations, a drop of 2%, and we couldn't even rally off of that news. In fact, we're trading lower today, trading lower in the overnight, just with very little interest in trying to buy this corn market. It does feel like a lot of the fun short covering that we saw lift markets last week has subsided in here. We are well off of last week's highs at 363, so over a dime lower than that. And without this momentum to keep pushing the market higher, very little reason for the funds to come out of their short positions. We're still going to have a really big crop unless we have some sort of a disaster. We're going to have very large ending stocks, and that's going to be reflected in Friday's supply and demand report. We're going to see some adjustments made for our quarterly stocks numbers and our acreage numbers as well, but we're still probably going to look at close to 2.8 billion bushel type carryout. So it's a market here that's going to struggle, especially now that we're past the 4th of July. It's just very, very difficult to rally corn and soybeans for that matter, as seasonals are usually working lower into the harvest time frame.
September corn currently down 3. We're at 343.5 per bushel. Let's look at the soybean prices with these quotes provided by bar chart. We've been fractionally either side of unchanged, and right now August soybeans have dipped below unchanged. We're down 3/4 at 8.97 3/4. On Chicago's wheat market in September, we're trading 4 3/4 higher though at 4.98. Although at one point we did touch $5 this morning. Kansas City September wheat now 3 3/4 higher. We're at 442 1/4. And the Minneapolis spring wheat market just barely higher by 3/4 cent on September at 513 1/2. We'll pause right here. We'll come back and talk more with Brian Hoops about some of these outside markets and our livestock trade right after this. Thanks for joining us, and we are talking with Brian Hoops right now. He's with Midwest Market Solutions in Springfield, Missouri. Let's take a look at cattle. On the big board here, we currently have the August contract 40 higher at 99.70. It is having a dickens of a time trying to hang on to that $100 benchmark. It bobs up and down above it and below it. October currently 15 cents lower at 103.77, so not a big move. The deferred contracts, though, are moving at least a $0.50 to the downside. February and April are anyway. If you look at our feeder cattle market, so far today you have everything on the downside, and August is now down by $1. We're at 135.15 per hundredweight. That's only 15 cents off our low of the day. We have now declined from our earlier high by $1.25. And September currently down 87 cents. We're at 136.35. Meanwhile, in the lean hog futures today, everything's still a little bit lower on the nearbys. More weakness on the deferred contracts. August lean hogs currently down 20 cents at 49.07, and the losses get a little steeper as you go further out. with December leading the way down 82 cents lower right now. All right, Brian, what do we have to talk about here on the livestock side that could be impacting the markets today?
Well, there's not a tremendous amount on the livestock news here this morning. We did have a little bit of 95 trade yesterday. That was a supportive feature for the market. Market's expecting that cash is going to work its way lower over the next several weeks due to a slow demand period, but the 95 was seen as steady, and there's been some additional 95 in Kansas this morning, and so that's keeping the support underneath the market. There's also 157 bids being passed in the north, and feeder cattle index up this morning. Stock market trying to rally off of its overnight lows. That should help be a supportive feature for the cattle market as well, and that is what we badly need if we're going to see higher prices down the road.
So that's correct. The Dow now about 100 points off of its earlier low here this morning, currently down 148 points. When you see the commodity funds net long on cattle, 17,000 contracts, does that concern you at all or not?
That's not a very large net long position. They pared that down from what they were, before the pandemic started, and well before that, they've had much larger positions. So it's not a real concern, but the funds adding to long positions, obviously what we need to get prices to move higher over the next several weeks.
Brian, thanks for the advice on the markets. Appreciate it, sir. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, with a look at our market activity at midday. Janet?